Welcome back. Well, we have kind of an unusual situation here. We have the combination of a quite strong GDP number that was just released and a strong VIX number. The VIX is the Volatility Index, also known as the Fear Index. Usually goes up when markets are scared. But it's a little unusual to have such a strong GDP number and also to have such fearful markets. Was as we know, the VIX, the GDP was just released recently to 4.9% level, and the VIX is above 20, which is usually a situation where we see weak market conditions and a lot of fear in the market. The white histogram bars here show us the VIX again coming out at 4.9% very recently. Meanwhile, the VIX is above 20 or right around at 20 at the moment. And that usually coincides with markets that are in a fearful state. Now, the VIX goes up when markets go down. Levels of 20, 25, 30 usually coincide with very weak markets above 40. It could be a stock market crash. Strong markets usually occur with a VIX between 15 and 20. So the fact that we're above 20, that's usually indicative of weak markets. But why are the markets so weak if the GDP is so strong? Well, these are what the averages look like. This is what the data looks like. On the bottom, we see here the x-axis. Those are the different brackets as far as GDP. So, and the numbers above here, that represents the average VIX level. Now, GDP is released on a quarterly basis. So these are the average VIX levels over the course of that entire quarter. So, for example, when we have a GDP number that's between 0 to 1% growth, we usually see 19.2 VIX. When the GDP increases to 1%, 1 to 2%, it's 18 VIX. 2 to 3%, 17.9. When we see a level of a VIX between, or I'm sorry, a GDP between 4 and 5%, which is where we are now, the average VIX is around 17, which means a lot of times the VIX is actually a lot lower than that. Conversely, when we see a VIX a GDP in negative territory, negative 1% to flat, that coincides with a 27 VIX. And that we see when we have a negative 5 GDP, negative 5% growth. Obviously that's something that's very unusual, but that coincides with a 45 level on the VIX, which usually occurred only during stock market crashes. Now, take a look at the data. This is going back to all the way to 1990. The black histogram bars represent the GDP level on a quarterly basis, of course, and the orange line represents the average VIX during that quarter that the GDP was released. And we can see for the most part here, take a look at the 1990s. We had GDP anywhere from around 2 up to almost 10% at one point. Very strong economies in the 1990s, especially the latter part of the 1990s. And take a look at the VIX. The VIX was at 15, 20, until we get to the stock market crash of 2001, then we start to see the VIX really rise. But, before that, we saw a very low VIX around the 15, 20 level. Now, conversely, we see obviously the 2008 stock market crash, the financial crisis. The VIX was a level of 60. And at the same period of time, the GDP was in a negative territory, around negative 10%. We saw an even bigger divergence between the two in the COVID crisis, where we saw a VIX. Now, that's the average VIX that registers right now just a little bit above 35. But at the time, there were readings, individual daily readings of the VIX up near 80, the worst part of the COVID stock market sell off. And during that period of time, we saw a GDP level negative 25. So clearly, we see that the market moves, the VIX market moves opposite to GDP, and that right now, with GDP at 4.9%, that typically coincides with a VIX level at sub 20 in the 15 level. Now, again, this is a quarterly average, and the last quarter, for the most part, the VIX was quite low. But we know at the moment the VIX is around 20. So we have to ask ourselves a question, which side is going to give up first? Meaning, is the GDP going to come down to match a rather strong VIX? Or will the stock market improve? As the stock market improves, the VIX will come down, and that will agree with what we see as a very strong GDP number. Or perhaps maybe the GDP, of course, is a lagging indicator. It shows us the growth over the past quarter. And that does make sense. It does coincide with what we saw as a VIX at 15. But given that the VIX is now near the 20 level, what does that say? If the VIX continues at 20 or above, what will that say about our next GDP reports? So there's a little bit of a divergence here. Thought it'd be interesting to make note of that data. We're going to continue to watch these and many other indicators along the way. We hope this has been helpful. We look forward to seeing you back soon.